Next in line by order of descending market capitalization is RCL Foods. Previously known, of course, as Rainbow Chicken Limited. It did quite a few transactions in the last 4 or 5 years, though. The first was to merge with a group called Foodcorp, which is a distributed food operator with bread brands like Yum Yum, peanut butter, and all that sort of thing. Nola, quite a big player in the dog food business. And then, in addition, it acquired TSB, which was a sugar producer within the Remgro group. Remgro is really the parent company, you could say, of RCL. I think it has upwards of 80+% of the shares, and that's because it put TSB in and it has refinanced, reorganized the group. But what it has done is turned what was South Africa's largest chicken player, Rainbow that is, into a diversified foods group. So it's really changing its spots, and it's trying to present itself as a competitor or a peer, perhaps you could say, to the likes of Pioneer and AVI and Tiger Brands. Market capitalization pretty hefty, 13 billion rand, PE of 6.46, that sounds low. Dividend yield of 2.64. Okay, Gerbrand, we know this one. We know it's had its ups and downs. It's got chicken, which we know has got issues. It's got sugar, which has got pricing related issues. But how are you feeling about them most recently?
Look, between all the chicken producers, I like this one the most because it's more diversified. So I think you got less than 20% from the chicken business these days. Because they've changed the way they're structuring their segmental reporting now. So I think they brought out numbers earlier this week. So in the past, you used to have chicken separately, milling separately, Foodcorp separately, sugar separately. They've now got a groceries business, which they're reporting on. They got the logistics vector business that they're reporting on, and they got a sugar and milling that they've thrown together. So a bit of each of the constituents they've changed. I think it's not a bad time to do it actually. But so it's a bit of a more mixture. They got lots of headwinds. We know they got more
what's the latest on the
sugar in South Africa, but at the moment the dams levels are so low, you get hampered on irrigation on that front.
Hang on, talking sugar for a moment. So you're talking drought problems, drought-related
problems. I think drought on that problem front, and then input cost on the chicken side is certainly the grocery side. They got certainly right over the last year. You could see Nola moving to #1 spot on the market share bucket. They got some new K9 dog food coming in on the groceries.
They got Dogmore and Epol.
Mahau is still one of the best sellers. I think that they also have like a lucky star market share in that game. So certainly that improved, I think, by 20% over the last year. The latest numbers improved by 25 in whole for the last 6 months. But they got some headwinds going forward. Remember that some of these animal feed businesses and so forth, they got contracted maize and contracted soya for the next, until the recent sets of numbers or whatever. So the next season will be certainly a lot higher. So margins may be okay now, but going forward they're going to certainly struggle on some of these businesses.
So you say it's sort of, because to look back at that share chart, about 2 or 3 years ago we thought it was a good opportunity because the market didn't really appreciate the scale of the earnings, and that seems to be sort of now coming through. But on the other hand, what you're saying is that there are now things that weren't perhaps a worry 2 years ago, which are even more of a concern. The chicken thing is not settled, still lots of imports to deal with. The price pressures on maize and on drought-related problems, sounds like quite a nasty mix. Although that bounce in the share price at the end there suggests that the trading update we saw earlier this week must have surprised people positively.
I think so, and I think they took the same knock as some of the other chicken producers who got much more headwinds. Here's some good stories in here as well. So from all the chicken producers, this is probably the most preferred one, because like I said, less than 20% of revenue and EBITDA is coming from the chicken side at the moment. They were struggling in that front. Strangely enough, all the other chicken producers made a lot of money over the last 12 months. So they certainly were hampered by oversupply in the market, is one of the excuses on that front. But they've certainly got the other businesses correctly. And the vertical integration that they've done, I think they can handle the margins going forward better than some of the other producers.
So what are you leaning towards? Do you reckon it's hot now because share prices come down, the story remains intact?
Can I go for mild? But if I have to choose one of the chicken producers, I'll choose this one and go hot for this one.
Okay, I'm going to go hot. Okay, why not? There's a story there. Makes sense.